There's been no stop in Netflix this year. The stock's risen more than 90%. Now, Oppenheimer suggests today that there is a lot more room to run. The firm raised a price target to $1,065 from $825. It's our call of the day as a result. Julia Boorstin with us now to look at why shares have rallied so much. This is one of those best performers that people don't talk about enough, I don't think.
Scott, that's right. Netflix shares are up 95% over the past year on confidence that the company will continue adding subscribers and will also have some new growth drivers. Netflix added 23 million subscribers in the first 3 quarters of this year. That's after adding 13 million last fourth quarter. Now, Netflix is going to stop reporting subscriber numbers next year as it works to shift focus to profitability. But here are some key areas that investors are counting on to drive growth. First, Netflix's move into live events with 2 Christmas Day NFL games is seen as a great way to attract users and also advertisers. And second is advertising. The company says ads will be a meaningful revenue contributor post-2025. It also helps the company offer a lower price subscription, which in turn minimizes churn. And that's third. Netflix's broad content library gives it leading retention, which means it has lower churn than its rivals, which are actually seeing growing churn. 57% of analysts have a buy or overweight rating on this stock, 35% have a hold, and 7% have a sell. Shares up about 0.5% today, Scott.
All right, Julia, thanks for that. That's Julia Boorstin. Joe, you own the stock. It really has been remarkable, up 90%. Year to date from where the stock was. Remember when it traded down to 400 after, what 700 to 400, and here we are.
I think what's remarkable is the analyst community is so far below current price in what their price target is over the next 12 months, $840. That's well below. Now, you can make the claim that the stock is expensive from a valuation standpoint relative to history and certainly to its peers. It trades at 39 times, which is a 50% premium to its peers. But I think it's warranted. I think live sports is creating such an opportunity for revenue in advertising. You're talking about a multi-billion-dollar opportunity. So this journey into live sports, you could criticize the Tyson-Paul fight and say it didn't live up to your expectation.
People still paid for it. They got subs out. People still watched
right.
it.
People watched it. So all you're criticizing is, well, the content isn't.
You're going to watch the NFL game too.
Exactly.
By the way.
Oh, they sure are, and I'll be one of them. So I think it's a tremendous opportunity as it relates to advertising. Now, is it vulnerable to some form of a correction if we turn the calendar into New Year? You see a lot of stocks that are being sold that were held off because of taxes. Yeah, potentially it is, but I still think that's not an inflection point.
That'll be a January test for the market, no doubt. A lot of big winners.